Okay, welcome to the deep dive. Today we are really digging into the latest earnings call from Take-Two Interactive. You know, the powerhouse behind GTA, NBA 2K, Civ, all those big names.
That's right. We've got the details from their Q4 and their full fiscal year 2025, which actually just ended back on March 31st.
And yeah, our goal here isn't just to read out numbers. We want to slice through the usual corporate talk and pull out what management's really saying. What are the signals for where this giant is heading? This is for you to get the quick, clear picture.
Exactly. So let's kick off with the headline numbers, the results snapshot. Take-Two wrapped up their fiscal year pretty strong. Net bookings hit $5.65 billion for the full year.
And for Q4?
$1.58 billion in the fourth quarter.
Okay. And importantly, both those numbers were right at the high end of their own forecasts, right?
Yeah.
Which is, always a positive signal.
Definitely. But the real story within those numbers, I think, was the recurring consumer spending. RCS, as they call it.
Yeah, that jumped out. Talk about that a bit.
Well, it was up 7% year over year for the whole of FY25. And it actually picked up speed in Q4, growing 14%.
14% in Q4. Wow.
Yeah. And it's just such a huge part of their business now. It made up 80%, 80 of their total net bookings for the year.
80%.
And 77% in Q4 alone. So it really shows how much ongoing engagement they're driving, how they're monetizing these games long after release.
A solid top line, huge boost from that recurring spending. Let's go deeper then. What drove that FY25 performance? They mentioned broad strength, but what were the highlights?
Well, NBA 2K was definitely a major one, especially Q4. They called out phenomenal RCS growth there. And the engagement stats they shared were pretty staggering.
Like what?
Daily active users up 30% year over year. My career daily players up 40%. And average games played per user shot up 80%.
80%? Goodness.
Yeah, and the base game, NBA 2K25, sold in nearly 10 million units, which itself was up 7% versus the last one. Plus, their other NBA stuff, like NBA 2K Online in China, still #1 PC sports game there.
It sounds like that focus on quality, actually listening to the fans, like bringing back the auction house, it's really paying off.
It seems so, yeah. Another big area was Zynga, their mobile arm. They kept their momentum going and, crucially, launched some profitable new mobile games. Stuff like Match Factory, Color Block Jam.
Which is impressive, right?
Yeah.
Because the mobile market's pretty tough out there now. How are they pulling that off?
Management pointed to a few things. Talented teams, studios actually working together, sharing what works, but also leveraging Take-Two's huge database of players, like hundreds of millions of records. That gives them a big leg up in promoting new games effectively.
Okay, that makes sense. Database power.
Right. Though they did flag that they expect some of the older, more mature mobile games to moderate a bit in FY26. So the outlook for mobile RCS next year is actually flat overall.
Ah, okay. Good context. And the big guns, GTA and Red Dead.
Still performing really well. Grand Theft Auto series exceeded what they expected. GTA 5. Get this. Over 215 million units sold in globally now.
Just incredible.
Isn't it? And GTA Online's recurring spending was up 5% year over year in Q4, helped by new content and the GTA Plus subscription. Red Dead Redemption series also had a strong Q4, RDR2 bookings up 23% year over year.
And they had new launches in Q4 too, adding to the mix.
Yep, successful launches for Sid Meier's Civilization 7, WWE 2K25, and PGA Tour 2K25 all landed in that final quarter.
Okay, let's talk expenses quickly. The GAAP operating expenses look like they jumped quite a bit. What happened there?
Yeah, they did. Up 44% in Q4, 28% for the full year on a GAAP basis. But the main reason, the overwhelming reason, was a massive $3.6 billion impairment charge they took in Q4.
$3.6 billion. Wow, that's huge. What exactly was impaired, did they say?
They said it was a partial impairment related to goodwill and acquired intangible assets. It came from one specific reporting unit, they didn't say which, and it was tied to updating their long-term forecasts for that unit, which is something they have to do annually for accounting.
Okay, so one unit's long-term view changed significantly.
Right. But they were really clear that they don't see this as some kind of structural problem with the overall business. If you look at their management basis numbers, which excludes stuff like that, OPEX was up a much smaller 3% in Q4 and 11% for the year, mostly just higher marketing spend.
Got it. They also mentioned their direct-to-consumer or DTOC business. What is that exactly for Take-Two, and why are they excited about it?
So DTOC is basically when they sell directly to you, the player, through their own websites, launchers, bypassing Steam or console stores sometimes. They said it hit record levels, and they're getting better at using personalization to drive sales there.
And they see more room to grow that.
Yeah, management seems to think there's an even bigger opportunity ahead. They specifically mention some recent beneficial court rulings that might, shake up the landscape for third-party store fees and make their direct channel even more appealing down the line.
Interesting. Okay, let's shift focus then. Looking ahead, what's the guidance for fiscal 2026, the year we're in right now?
Right. For FY26, the initial outlook for net bookings is $5.9 billion to $6 billion.
Okay, so at the midpoint, that's what, about 5% growth compared to FY25?
Exactly, around 5% growth.
And what games are expected to drive that?
It's a mix. The usual suspects, NBA 2K, the GTA series, Red Dead Redemption. On the mobile side, Toon Blast, Mad Factory, Empires and Puzzles, Words with Friends, Zynga Poker. And importantly, new releases like Borderlands 4 are expected to be significant contributors.
Okay, but here's something interesting. While overall bookings are guided up, recurring spending, that RCS figure, is expected to be flat year over year for FY26.
That's right, flat, expected to be about 76% of bookings.
That feels like a change of pace after the strong growth we just talked about for FY25. Why flat RCS now?
Well, the breakdown is key. They do expect continued strong growth for NBA 2K's RCS, like high single digits, which is great.
Right.
But they're forecasting declines in RCS for both the mobile segment overall, like we mentioned, with the mature titles moderating, and for GTA Online specifically in FY26.
Ah, okay.
Yeah.
So NBA 2K growth is basically offset by dips in mobile and GTA Online recurring revenue next year.
Pretty much, yeah. So the takeaway is FY26 growth is really banking on the new game releases because the underlying live service momentum in some key areas is expected to cool off a bit before the next big thing hits.
Right. So what is the FY26 release slate then to get them to that 5% growth?
They've got 13 titles planned. 4 of those are what they call immersive core, the big premium games. The 2 they really highlighted and that got people talking are Mafia, the Old Country. That's coming August 8th. Described as a premium, linear, story-driven game set in 1900 Sicily.
Mafia. Okay, cool.
And the other big one is Borderlands 4, landing September 12th. They showed off gameplay recently, new Vault Hunters, updated gear. Apparently the community reaction was really strong.
Right. Borderlands 4, that's a big one. So 2 major core games this fiscal year. What else?
The annual sports games, of course, NBA 2K, WWE 2K, then 5 mobile titles, including a WWE 2K that's coming to Netflix this fall, which is interesting.
UW on Netflix.
Yeah. And 4 new iterations. Things like Civ 7 VR, which just launched, and Civ 7 coming to the Switch 2. They mentioned that version will have new mouse controls.
Oh, Switch 2. They seem pretty committed to Nintendo's next console then.
Yeah, definitely. They explicitly said 4 titles planned initially for Switch 2. They sound optimistic about the platform itself and also that Nintendo seems to be making things easier for third-party developers this time around.
So supporting it strategically, but maybe not every game goes there.
Exactly, case by case, reaching players where they are.
Okay, so FY26 sounds like a solid year driven by these new releases, but with that flat RCS in key areas, definitely something to watch. But let's be honest, the real hype, the thing management kept circling back to was fiscal 2027.
Oh yeah, that's where the narrative just completely shifts.
Right.
FY27 is being positioned very clearly as a massive inflection point for Take-Two, and it's almost entirely down to one thing, Grand Theft Auto 6.
The legendary GTA 6, we finally got a date. Well, a firmer date.
A date, May 26, 2026. And crucially, that date lands smack bang in their fiscal year 2027.
Right. FY27 starts April 1st, 2026, so May 26th fits.
Exactly. And management went out of their way to say giving Rockstar that additional time was a worthy investment for such a groundbreaking project.
And the hype? I mean, it feels different this time, even for GTA.
They literally called it the most anticipated entertainment property of all time, repeatedly. And the numbers kind of back it up, don't they? Trailer 2 hit over 475 million views in 24 hours across all platforms.
475 million in a day.
After Trailer 1 did 93 million just on YouTube in its first day. They even mentioned that song from the trailer. Its Spotify streams exploded by like 182,000%. It's a cultural phenomenon before it's even out.
It's just wild.
And they stressed the ambition, the complexity for GTA 6 is beyond anything Rockstar's done before. So given all the scale, the complexity, the insane anticipation, they expect GTA 6 to drive record levels of net bookings in FY27.
Record levels. And what does that mean for the company beyond just that launch year spike?
They believe it's going to set a new baseline for the whole business going forward and significantly boost profitability. They actually sounded more optimistic, they said, about their long-term financial future, specifically because of GTA 6.
And they have stuff planned beyond GTA 6 too, right? It's not just a one-hit wonder year.
No, they mentioned a pipeline of about 38 titles planned through fiscal 2028, and 25 of those are actually slated for FY27 and FY28 combined.
25 in 2 years,
Including 17 immersive core releases in that FY27, FY28 window. So yeah, they're planning for a sustained period of major new content releases after GTA 6 launches.
Okay, bringing this back to the investor view, what about margins? Can they get back to those previous peaks with these huge development costs?
Yeah, they addressed that.
Yeah.
Despite acknowledging costs are higher for these massive games, management said they are confident they can get back to their prior peak operating margins, which were in the low to mid-20s range. They think as this big pipeline matures, as the business scales up massively with GTA 6 and beyond, and also through the cost-cutting programs they've already been putting in place, they can achieve that kind of profitability again.
Makes sense. And pricing, always a hot topic. Did they talk about potentially raising prices for games like GTA 6?
They talked about their general philosophy. They stuck to their line about having a variable pricing strategy. The core idea, as they put it, is always delivering way more value to consumers than what we charge.
Okay.
They used Mafia, the Old Country, as an example, pricing it lower, they said, to reach more people. Their fundamental belief seems to be if you make a massive hit that everyone has to play, the sheer volume of sales will drive huge revenue, maybe more than just trying to slap a higher price tag on it.
So focus on value and volume driving revenue rather than just price hikes.
That seems to be their stated approach, yeah. It's kind of counter to some industry chatter, but their focus is clearly on making it feel like a great deal for the player to drive those massive sales numbers.
Right. Okay, this has been a really good deep dive into the Take-Two call. Now, we absolutely have to put up the big flashing sign. This is not financial advice.
Absolutely mandatory disclaimer. What we're about to discuss is purely for entertainment, for discussion, based only on what we heard in this specific earnings call. Do not trade based on this.
Okay, disclaimer delivered. Here's our outrageous but plausible trade idea, just as a thought experiment.
Let's hear it.
Go long Take-Two stock. Or maybe, if you're feeling really speculative, a longer dated call option, something that expires well after May 2026.
Okay, the thesis being?
The thesis is simple. It's a pure leverage bet on Grand Theft Auto 6 being that massive inflection point in FY27 they kept talking about.
Right, tying it directly to the call narrative.
Exactly. You're betting on the unprecedented anticipation those 475 million trailer views are hard to ignore. You're betting on management giving Rockstar the time needed for quality. You're betting on their own words, record levels of net bookings, new baseline, enhanced profitability.
So the argument is the market might still be underappreciating the sheer scale of the GTA 6 impact in FY27, especially given the more muted FY26 outlook with flat RCS and those declines in mobile and GTA Online.
Precisely. The idea, speculatively, is that the FY27 catalyst is potentially so massive it overshadows any near-term headwinds or moderation expected in FY26.
Of course, the massive caveats apply.
Oh, absolutely.
Yeah.
This completely ignores the FY26 challenges we discussed. It ignores the very real risk that any game launch, even GTA 6, could face delays or not quite meet the sky-high hype. Execution risk is always there.
But as a thought experiment based only on the narrative from the call.
It's a high-conviction bet, framed by their own words, on the potential scale of what could be the biggest entertainment launch, well, ever.
A thought experiment indeed. Strictly hypothetical.
Okay, so let's wrap this up. Key takeaway. Take-Two finished FY25 solidly, hit their numbers, driven by that strong recurring spending, especially from NBA 2K and mobile hits.
But the real energy, the overwhelming focus from management, is squarely on the future. Specifically, that build towards fiscal year 2027, which they see as transformative. Driven by a big pipeline, but really all eyes are on Grand Theft Auto 6, launching May 2026.
They sound very confident in that pipeline, in their strategies for mobile and direct-to-consumer, and in their core philosophy of value and quality execution.
And one last time, this deep dive was purely an analysis of the earnings call, absolutely not investment advice.
Right. So here's a final thought for you, the listener, to chew on based on everything we've unpacked. We heard about impressive engagement growth right now in games like NBA 2K, but we also heard a specific forecast for declines in recurring spending next year for mobile and GTA Online. What does that contrast tell you about the challenge of keeping live services constantly growing, especially before a massive new game or content injection arrives? How much does a business like this really rely on those huge, maybe cyclical blockbuster hits versus the steady, everyday performance of its live games? Something to mull over based on the signals from the call itself.